Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest growing regulated all-in-one trading and investing app. Whether you're looking to invest in US stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the details are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Imagine you spend years building this massive, impenetrable digital fortress.
Right.
You build it specifically to escape the traditional financial system. Like, you want absolutely no part of their rules, their middlemen, their gatekeepers.
Yeah, total independence.
Exactly. So you finally finish the fortress, you pull up the drawbridge, and you look out the window, only to realize that the traditional banking system they just bought the land your fortress is sitting on.
Oh, wow.
Yeah. And they're offering you a highly regulated mortgage on it.
That is, it's the ultimate irony, isn't it? I mean, you build a system to completely bypass the institutions, and the institutions end up becoming the landlords of that very system.
Exactly. And that tension is really what we are getting into today. So welcome to today's deep dive. Just to set the stage for you listening, today's date is March 16th, 2026, and we are unpacking a really fascinating breakdown from a tech and finance show called Blockchain DXP.
Yeah, it's a great source.
It really is. We're going to be exploring the massive shifts happening right now at the intersection of, global finance, cryptocurrency, and artificial intelligence.
Because it is just a wild landscape out there right now. And the discussion we're looking at, it provides this brilliant snapshot of this very specific moment in time.
It does. And the core mission for us today is to really explore that central tension we just mentioned. The friction between these pure, decentralized cypherpunk ideals
and the absolute reality of centralized institutional control.
You nailed it. Okay, let's unpack this. We have to start by looking at the macro environment because, that sets the stage for where all the global capital is moving.
Right, you have to look at the big picture first.
Exactly. And right now, if you look at the cryptocurrency market, it is just pumping.
Yeah.
I mean, Bitcoin is sitting over $71,000.
Which is a massive psychological threshold.
It really is.
And to understand why that's happening, you have to look at the underlying market metrics. The The focus here from the blockchain DXP guys is on the fear and greed index.
Right, which tracks overall market sentiment, right?
Yeah, exactly. By aggregating volatility, market momentum, and social media trends. And recently, it was sitting at 22, which is categorized as extreme fear.
Like people totally panic selling.
Exactly. But it has just moved up to 34.
Still technically in the fear zone, sure, but a massive improvement.
A huge jump.
And listening to the blockchain DXP breakdown, this growing optimism, it's being driven by two main factors. First, inflation has dropped down to 2.4%.
Which is huge news for the markets.
It is. Now, I do want to point out, the hosts on Blockchain DXP make a very specific argument here. They draw a direct line between this cooling inflation and the incoming Trump administration's policies.
Right. That was their take.
Yeah. And, regardless of where anyone sits on the political spectrum, we're just relaying their claims here. But it's undeniable that this specific narrative, it's what is heavily driving current market optimism.
Oh, absolutely.
Investors are looking at that 2.4% and just breathing a massive sigh of relief.
Precisely. I mean, the market is reacting to the data, and the data shows the cost of living and, well, the cost of doing business is cooling down.
Right.
But the second factor driving this optimism is perhaps even more counterintuitive. It involves the current geopolitical situation in the Middle East.
Ah, yeah. Operation Epic Fury.
Exactly. The situation involving the U.S., Israel, and Iran.
Right. And when that conflict initially broke out, the market just totally gumped. Which, makes complete sense. War usually means panic.
Of course.
But then the market stabilized, and it even started pumping again. And according to the source, the underlying reason for this stabilization is tied to the constant, steady stream of updates coming from President Trump and Pete Hegseth from the Department of War.
What's fascinating here is the psychology of market certainty.
Tell me more about that.
Well, if you are an investor, you would logically think that regular updates about a major military conflict would keep you spooked.
Right, like more news about war equals more anxiety.
Exactly. But markets don't actually hate bad news as much as they hate uncertain news.
Oh, that makes sense.
Yeah. When there is a vacuum of information, capital just freezes. Investors pull their money out of risk assets like cryptocurrency because they simply cannot calculate the odds of what happens next. They need data to model risk.
I was thinking about this, and it's like driving in a massive storm.
Okay, I like that.
The market doesn't actually mind the heavy rain as long as the windshield wipers are working. The regular updates from the Department of War, they're the windshield wipers. They don't stop the storm, but they give you just enough visibility to keep your foot on the gas.
That is a perfect analogy. The continuous updates, they provide the parameters of the crisis. Once the market can, map the boundaries of the risk, it can mathematically price that risk in.
Right. And once the risk is priced in, liquidity starts flowing again.
Exactly. And that desire for stability, it ties directly into the other massive macro event on the horizon.
You mean the FOMC meeting?
Yes, the anticipation of the March 17th and 18th FOMC meeting.
The Federal Open Market Committee, led by Jerome Powell, the entire financial world basically holds its breath for these meetings just to see what they do with interest rates.
And the expectation right now is that interest rates will remain unchanged. To understand why this matters, you have to think about how interest rates act as, gravity for financial markets.
Gravity.
Yeah. When interest rates go up, gravity is heavy. It makes borrowing expensive, so capital retreats to safe, high-yielding government bonds.
Okay, so money pulls back.
Right. But when rates are unchanged or low, gravity is light. It doesn't tighten the money supply. So when capital is relatively cheap and accessible, it naturally flows outward on the risk spectrum, looking for higher yields.
And Bitcoin and crypto are sitting right there at the very edge of that risk spectrum.
Exactly, waiting for that capital.
So the market is feeling confident, the macroeconomic gravity is light, and capital is flowing back in. But here's where it gets really interesting.
Oh, yeah.
Where is that money actually going? Because if you follow the money, it reveals a glaring, massive contradiction in the entire crypto space.
It really does.
There is massive institutional inflow right now. We are talking about $214.7 million recently pouring into crypto ETFs.
And to put a finer point on it, look at BlackRock.
Right, the ultimate symbol of traditional Wall Street finance.
Exactly. They have a new Ethereum Trust ETF trading under the ticker ETHA on the NASDAQ. And as of March 13th, 2026, that single fund holds approximately $6.7 billion.
$6.7 billion.
They're staggering.
Meanwhile, the volume on decentralized exchanges, or DEXs, is just absolutely plummeting. The total locked value, or TVL,
Which is basically the metric for how much actual cash is deposited and working inside these decentralized protocols.
Right, exactly. That TVL across the entire landscape is under $100 billion.
Yeah.
The top DEXs, platforms like Pump, Uniswap, PancakeSwap, they're all seeing 24-hour volumes well under $1 billion.
They are bleeding volume.
Bleeding. It's wild.
It's a stark contrast. The money is entering the ecosystem, but it is entirely bypassing the decentralized infrastructure.
What do you think that is?
Well, to understand why, you have to look at the mechanics. Decentralized exchanges rely on automated market makers, or AMMs, rather than traditional order books.
Okay.
So if an institution like BlackRock wants to buy $100 million worth of Ethereum on a DEX, there just isn't enough liquidity. They would suffer massive slippage.
Slippage, meaning the very act of them buying would spike the price so high that they'd get a terrible deal.
Exactly. Plus, DEXs don't have compliance departments or know your customer regulations.
Which Wall Street obviously needs.
Mm-hmm.
And then there's the absolute kicker from the source material. At a recent Senate hearing, a representative from Kraken revealed that 85% of crypto transactions are taking place on centralized exchanges.
85%.
85%. You have to step back and look at the irony here. Wasn't the entire cypherpunk ethos of cryptocurrency supposed to be about bypassing Wall Street middlemen?
That was the dream, yeah.
I mean, the whole point of the blockchain was to create a trustless system where you didn't need a massive institution to hold your money. And yet here we are, handing billions of dollars to BlackRock. Are we just recreating the traditional banking system, but with digital coins?
If we connect this to the bigger picture, what we are looking at is the institutional paradox.
The institutional paradox. I like that.
Yeah, the blockchain was built to be revolutionary, right? To be completely decentralized. But to achieve mainstream success, to get your average retail investor, your pension funds, your major corporations involved, you need psychological safety.
Okay, psychological safety.
And the raw decentralized blockchain is not safe for the average user. I mean, if you lose your private keys, your money is gone forever.
Right. There's no customer service number to call.
Exactly. So institutional money brings this much needed legitimacy. It provides a familiar wrapper like an ETF on the NASDQ for an unfamiliar technology. It basically solves the user experience problem.
Wait, I have to push back on that. So isn't that just a massive cop-out? If all we wanted was psychological safety, we already had JP Morgan and Wall Street. Why go through the trouble of inventing blockchain technology, dealing with all the volatility and the massive learning curve, if we're just going to hand the keys right back to BlackRock? It feels like trading self-sovereignty for convenience.
You are hitting on the exact philosophical divide in the industry right now. You are trading self-sovereignty for regulatory protection.
It's wild.
The paradox is that in solving the user experience problem, you inevitably centralize control. You fundamentally alter the original vision of the technology.
And relying on those massive traditional institutions carries its own severe risks, doesn't it?
Oh, absolutely.
Which transitions us perfectly into a major legal scandal happening right now. It turns out the so-called safety of the traditional banking system has some massive blind spots. JP Morgan is currently facing a class action lawsuit for allegedly enabling a massive $328 million crypto Ponzi scheme.
A scheme run by an entity called Goliath Ventures. The lawsuit claims that JP Morgan processed massive transactions and just completely ignored glaring warning signs over a 3-year period from 2023 to 2026.
It is wild.
Right.
The CEO of Goliath was arrested, accused of spending investor money on luxury purchases to fuel this, incredibly lavish lifestyle, and now faces up to 30 years in prison.
Just staggering.
When I was looking at how this happened over 3 years, I was thinking, it's like an alarm company, watching someone carry out the TV set every single night for 3 years and deciding it's just a really long, drawn-out, moving day.
That is a brilliant way to put it. And this raises an important question, which is the issue of counterparty risk.
Right.
When you centralize your assets, who are you actually trusting? When you use a centralized exchange or a traditional bank, you are relying entirely on their internal compliance departments and, well, their ethical compass.
And if that compass is broken?
Exactly. If their internal systems fail, or if they just turn a blind eye to massive unexplained inflows and outflows, you suffer. You are trusting a private database rather than a public verifiable ledger.
Which brings us to the ideological pushback. Because while 85% of people are running toward centralized exchanges, the Ethereum Foundation is aggressively moving the other way.
They really are.
They've just outlined a new mandate, and it is entirely focused on long-term resilience over short-term profits.
They are planting their flag. They recognize that if Ethereum just becomes another back-end database for Wall Street, it has failed its original mission.
Yeah.
Their new guiding principles are summed up in an acronym, CROPS.
SHRBPS. Censorship-resistant, open source, privacy, and security.
Exactly. And the foundation is prioritizing these principles even if it means sacrificing rapid growth or, institutional adoption.
Because it's a defense mechanism, right?
Yes, because STIR-PS is a necessary defense mechanism against the exact systemic vulnerabilities exposed by the Goliath Ventures fraud. Think about the mechanics. If a network is truly open source and transactions are verifiable on-chain, no single entity can hide fraudulent activities behind closed corporate doors.
Right, the transparency is built in.
Exactly. If it prioritizes privacy and security at the base layer, users don't have to rely on a JP Morgan to protect them. The protocol itself becomes the compliance department. They were trying to build the infrastructure for global self-sovereign coordination.
Which makes me wonder, if the blockchain can't keep our digital assets completely safe without us running back to centralized banks, how on earth do we protect against something as elusive as artificial intelligence?
That is the perfect pivot, because that exact battle for sovereignty and safety is playing out with AI right now.
It's everywhere.
And to see the front line of that battle, you have to look at the Middle East, which is aggressively bridging the gap between cyber threats and literal physical safety.
The statistics coming out of Saudi Arabia regarding AI are just staggering. Deepfake fraud cost $25 billion globally in 2024.
$25 billion, let that sink in.
And then that number is projected to hit $40 billion by 2027. We were talking about $40 billion stolen using fake voices and manipulated video. And in Saudi Arabia alone, deepfake incidents spiked by 600%.
It's an absolute epidemic of synthetic fraud.
Imagine you were running a regional bank in Saudi Arabia, and you realize you literally cannot trust the voices of your own clients on the phone.
It creates an existential challenge for governments and organizations. To fight these deepfakes, you urgently need cutting-edge AI detection software, because human ears and eyes, they can no longer spot the manipulation.
It's too good.
Way too good. The AI has to analyze the audio waveform, looking for the absence of microscopic human breath patterns or synthetic audio artifacts that we simply can't detect.
Right.
But here is the catch. If you are a sovereign nation or a highly regulated industry, you cannot afford to send your sensitive internal client audio data to a cloud server in California to be analyzed. If you do that, you lose your data sovereignty.
Right, you just traded one massive security risk for another one.
Exactly.
So to combat this, Dubai Ventures, which is backed by Saudi Arabia, has invested heavily in a California-based startup called Resemble AI. This was part of a larger $13 million strategic round that also included heavy hitters like Google and Sony. And the crucial detail here, the reason this investment matters so much to our discussion, is that Resemble AI allows these Middle Eastern organizations to deploy the deepfake detection locally.
That is the linchpin, on-premise deployment.
Yeah.
It means the Saudi government or a regional bank can run this incredibly advanced AI detection model within their own physical infrastructure, on their own servers. The data never leaves their control.
Wow.
It is a perfect example of utilizing global technological advancements while strictly maintaining local sovereignty. It's an infrastructural defense against a weaponized AI, ensuring that the shield you buy doesn't also become a backdoor for someone else.
So what does this all mean? We have Saudi Arabia using AI to build a cyber shield to protect their digital reality. But then you travel a bit further down the Gulf to Dubai, and they are using AI to protect physical reality.
Yes, the new beach tech.
Dubai just rolled out this wild new AI-powered beach safety system. And I have to say, reading about the mechanics of this from the source material, it felt like science fiction.
It is a remarkable integration of robotics and public safety. Dubai has deployed a system that combines aerial drones with aquatic rescue robots.
It is literally an autonomous robotic Baywatch. They have these drones up in the sky equipped with live camera feeds. The AI is constantly scanning the water, analyzing the movement patterns of swimmers to detect the specific thrashing motions of someone in distress.
Right, looking for the panic.
And when the system flags an emergency, they deploy these remote-controlled aquatic robots into the water.
And the physical specifications on these robots are incredible. They can be operated from up to 1 kilometer away.
A kilometer.
Meaning a single lifeguard station can cover a massive stretch of coastline without any delay in response time. And they can reach a distressed swimmer 5 times faster than a human lifeguard swimming from the shore.
Okay, I have to admit, towing 500 kilograms is impressive, but I was trying to picture the mechanics of this when I was prepping. How does a drone flying a kilometer away actually hand off a rescue robot to a drowning, panicking person in crashing waves without accidentally injuring them?
It's a great question, and it comes down to the design of the intervention. The drone provides the overhead telemetry, acting as the eyes.
Okay.
But the robot itself isn't a mechanical arm trying to grab the swimmer. It's designed essentially as a highly maneuverable, self-propelled, buoyant platform.
Oh, I see.
So the operator guides it precisely to the swimmer, and the swimmer simply grabs onto the handles. Once secured, the operator uses the 500-kilogram towing capacity to pull them back through the surf.
So if there's a group of people caught in a riptide, this one robotic platform can pull multiple swimmers back to safety at once, all while keeping the human lifeguards out of the dangerous sea conditions. It genuinely changes the entire equation of water rescue. And I love how it connects back to the data sovereignty in Saudi Arabia, too. It's all about maintaining a perimeter of safety, whether that perimeter is a digital firewall analyzing voice patterns or a physical shoreline being patrolled by drones.
It perfectly synthesizes the dual nature of artificial intelligence that we are currently wrestling with globally. In the first example with the deepfakes, AI is the ultimate threat.
Right.
It is the tool used to steal billions of dollars and erode human trust in reality itself. But in the second example, AI is the ultimate protector. It is the fraud detection algorithm keeping the data safe on local servers, and it is the mechanical lifeguard pulling people from the ocean.
It's a double-edged sword.
Totally. What we are seeing is that the Middle East is currently setting a very aggressive global benchmark for integrating AI into the daily architecture of public infrastructure for both cyber and physical defense.
It really is a profound shift, and it brings us full circle on the journey we've taken in this deep dive today. We started by looking at the macro market, how global capital is just thirsty for clarity and certainty, finding comfort even in military updates as long as they are predictable and help price in the risk.
Right, the windshield wipers.
Exactly.
Yeah.
Then we looked at the massive tension in the crypto space. You've got billions of dollars flowing into centralized ETF like BlackRock because institutions need that familiar wrapper while decentralized exchanges just kind of dry up.
The institutional paradox.
Right. It creates this massive paradox where we are using revolutionary trustless tech to literally recreate the old banking system.
Which is exactly why the pushback from entities like the Ethereum Foundation with their CRPS mandate focusing on censorship resistance and open source verification is so critical. Because if we don't build robust decentralization, we are left vulnerable to the exact counterparty risks we saw with the JP Morgan lawsuit.
And finally, we saw how that same battle for sovereignty and security is playing out with AI in the Middle East. From Saudi Arabia fighting a 600% spike in deepfakes by demanding localized data systems, to Dubai deploying autonomous rescue robots to physically pull people from the water.
It's all connected.
It is. And the reason this matters to you listening, whether you are an investor watching Jerome Powell adjust interest rates at the FOMC, or a tech enthusiast tracking liquidity volume on the blockchain, or just a tourist wanting to go for a swim at the beach in Dubai, is that these technological intersections are completely rewriting the fundamental rules of trust.
Completely rewriting them.
They are changing the definition of safety, and most importantly, they are shifting who holds the power in our daily lives.
We are building incredible, highly capable systems to manage our risk. But as we integrate them, we have to be incredibly conscious of who actually controls the underlying mechanisms of those systems.
Exactly. Which leaves me with one final thought for you to mull over. Think back to that digital fortress we talked about at the very beginning of the show.
The one with the new landlords.
That's the one. If we are currently willing to hand over 85% of our decentralized digital assets to centralized, traditional financial institutions just for the sake of convenience and a better user experience, and we are willing to hand over our physical safety to autonomous, remote-controlled AI robots patrolling the skies and the seas, At what point does our pursuit of ultimate frictionless security permanently cost us our independence? Something to think about. Until next time.